Yes, Mr. Eddie.
Yeah, how's it, bro?
What's up?
I'm good. How was your day?
Nah, my day was all right. How was work?
It was so, man.
Uh,
Every day is in-
who's this now on the P20?
P20. I'm not so busy.
He's not talking. Maybe he doesn't want to hear. He doesn't want us to hear.
It looks like it's not all joined with audio.
Nah, he's in privately. I think he doesn't want us to hear him. There's guys that I really wanted to join now because when they see the recording now, it's best they ask questions in on a live video. I think he's the one writing. Why did you join privately? We can't hear you. Why? Why? How come you don't have sound?
You must leave and join again.
Yeah. Oh, that's cool. It's Kumbuzo. I don't know why he doesn't have sound.
Where's Kudi?
There we go now.
Hello.
Yes, Mr. School.
Oh, thank you guys. Thank you guys. I can't erase now. I drew something there. Okay, now.
Don't worry, I can.
Yeah, it's clear now.
Don't worry.
Okay.
I can move it, yeah. Otherwise, you good?
I'm very well. I'm very well. Today I'm not using my PC. I'm
Oh,
using my phone.
oh, yeah, on the
Yeah,
phone.
so it's for the first time. Yes.
I see. No worries. No worries. How's Swaziland? There's something wrong with this phone. Anyway,
Oh,
let's get on with it. So
all right.
today I want to show you guys on how you can use the Fibonacci levels, the same one that I use, the one that I learned from ICT. So I'm gonna show you how to plot them, how you can enter them, but you can only do this on a PC now. You can't edit the fibs on a phone.
Oh, okay.
Yeah. So you can only edit your fib levels because I don't know how to edit them on the phone because I only use the phone to monitor my trades. I don't do analysis or anything on the phone. I only do it on the PC. So the Fibonacci levels, you can only edit them
I understand.
from the PC. So first things first, you all know where to get the fibs. It's right here. When you're on MT4, that's where you get your Fibonacci 2. Now, I'm just gonna draw a random fib so that you guys can see. I don't know if you can see my levels, the 0, the 23%, the 38%. Can you see those guys?
Yeah.
From the bottom going up, right?
Yes.
Yes.
Yeah.
23.2,
Yeah.
50, 61.8.
Yes, those are the fib levels that we are gonna get rid of, and then we edit and put the ones from ICT. So to do that with the mouse, Can you see the red line? This red line here. This, the dotted red line.
Mm-hmm.
You need to double click on that red line. When you double click, it's going to be highlighted. Then you right click it, you go to Fib properties. Right? Once now you're on the Fib property, then you need to get rid of all these. You select, delete, select. You see, you just highlight the default fibs, you delete everything. You delete all of them. Now the Fibonacci's are blank. There's nothing on the Fib properties, the Fib levels. So the ones that we need to add now are the following. Let me see if I can text. I'm just gonna put them here for now. So we are going to be adding like 8 levels. Right. You can all see those levels, right? We've got the 0%. We've got the 0%.
Yes.
Yeah, which is our first profit scaling, meaning this will be the target of the trade. The moment we define our trade using the Fib levels, the first take profit should be your 0 level, which is the first profit scaling. And then we've got the 0.618, which is the 62% retracement level. It's also level which we can consider to trade from, but under normal circumstance, it's like a get ready retracement level whereby you need to now look at the price to see if it can head over to the 70.5% level. We've got the number one, the level number 1, which is 100% level. This is to let you know that, okay, the swing point that you have used the Fib level on to measure, it has retraced 100% from the first swing point. I'm going to elaborate once we have these levels on the chart. So I will elaborate on it because we are going to take a look at the trades of Euro USD from last week, Friday. And then we've got the 0.705 level, which is our optimum trade entry. This is where we open the trades. Once price has retraced 70.5% of the swing point that we are targeting, then we can open the trade from that level. If it's a bullish swing that we are trading on, if that bullish swing has retraced 70% to the downside, then we enter a long position from the 70.5% level. We also have the 0.79, which is the 79% level. It's also for those traders who are more conservative, as in they don't like to take much risk with the 62 and the 70.5. The 79% level offers a more less risk trades, because 70.5, you find out that maybe price will shoot a bit further down from that level before it eventually goes into the direction. So the 79% is for those traders who try to protect themselves from maybe a stop hunt. Then we've got the the negative 0.62 target. That's target number 2. This target number 2, let me just anoint here. Just a minute. These are targets which are derived after the first profit-taking level. The first profit-taking level is our first target, which is our first take profit. The second take profit is target 1, which is the negative 0.27 level. And then the third profit taking level is the negative 0.62. These are your take profit points once you have entered the trade. So you'll be expecting price to reach those levels. And then we've got a negative 1, which is the symmetrical view. In other words, it's basically price has retraced and continued with the direction from the first swing, like 100%. Price has swinged 100% of the swing that you have used your fib on. Yes, Mr. Moja Lefa, I can see you there. You must smile a bit. You can't even hear me. He's struggling, this guy. He's struggling.
Yeah, I'm finally.
My brother, I can hear you.
Yeah. Yes, I can hear you now.
Oh, it's your first time, I see. Okay, anyway.
Yeah, I've been stuck. Yeah.
Anyway, let's continue. So the symmetrical view, under normal circumstance, we really don't consider it for take profit. It's more of like a trade. So now to enter the values, let me just clear up quickly here. For those guys who have missed the first part, let me just quickly redo it again.
Yes.
Just quickly. So we all know how to draw our fib levels. We've got the default fib levels, which are 23, 38%, 50%. The dotted line, it can be any color. I don't know what settings you guys have got on your MT4. Remember, guys, we only do this on the PC. I don't know what color of a line you've got on your MT4 card, but that line there is the one that you double click and right click. Then you go to fib properties, where you are going to get these default values. You need to delete all of them. You need to delete all these values so that we can enter the values that we use using institutional order flow. So now, let me just copy here. Text. Right. So these are the fib levels that we are going to use. We've got the 0%, the 0 level, which is our first profit scaling, the first target. Once we are using the fib level, this is your first take profit level. And then we've got the 62% retracement, the 100% retracement, the 70.5, which is our optimum trade entry. This is where we look to enter the trade in anticipation of a continuation of price in the original direction. If it's a bullish momentum that we have used our fib on, once we get a 70.5% bearish retracement, then we look to go long from the 70.5%, which is the optimum trade entry. The 79% is for those traders that are, what can I say, who don't like to take too much risk on the 70.5. Traders who are trying to safeguard themselves from the stop hand. Because you will notice that from the chart I'm going to show you now, you will notice that the moment price reaches 70.5% level, normally it also targets the 79%. It targets that price during a stop hand before it eventually goes the other way around. Then we've got the negative 0.62. That's our target number 2, which is take profit. Target 1 and 2. These are all take profit zones that come after the 0 level, which is the first profit scaling. Now, to enter these values on your fib levels, remember we have right-clicked the fib line, we come to the properties. You just go to add. Just a minute. I need to remove this guy. You go to add. For the first zone, the first level, I mean, which is the first profit scaling, which is on top, you type your 0. Then under description, you write first profit scaling. Then you go to add, you write 0.618. Then under the description, you write 62. You're supposed to write percent and $sign stroke 62%. The $sign, the percent sign and the $sign, it's a programming language for the MT4 that allows price to be displayed before the 62%. You will notice that once we are, you can notice the default values, they just have the retracement level, 61, 61.8, 60.8, but there's no price of that level. So the percent $sign allows the MT4 to display the price of the 62% level. So then,
Okay.
yeah. Then we add the level 1, which is our 100% level. That's our 100% level. Then we go to add again. I'm sure you can all see how I'm adding these levels. 70.705.
Yes.
Go to percent $sign dash OTE dash 75%. Let me just put a space there. Then I go to add. Now I'm gonna add the 79% level, 0.9, then percent $sign. This is our 79% level. And then we've got the targets now, which is negative 0.62. That's our target 2. And then we've got negative 0.27. This is our target 1. And then we've got the negative 1, which is our symmetrical swing. Normally symmetrical swing, what it basically means is the whole market structure of the chart has changed.
Okay.
Yeah. So now all the levels are added. Now I'm gonna click OK. Let me just clear up these levels now. Right. Now you can see that I have the new levels now. Let me see if I can make them big so that everyone can see just for the video presentation. Unfortunately, we can't make them bigger. We can't make them bigger. Can only make the line bigger.
Yeah, we can just zoom in.
It's not gonna work.
So this so how do you get to delete them, my brother?
To delete them, the
Yeah.
other way around. You see, you right click on the Fib properties
Okay.
and then you highlight it and then you go to remember you're doing this on a PC.
No. What I'm saying is, what I'm asking is if you put, like, for instance, yesterday I put them on a chart, but then I couldn't delete them because I drew them wrong.
Oh, you couldn't delete, like to remove them from the chart?
Yeah, to remove from the chart.
Okay. You right click on the Fib, you go to delete. You mean this way, yeah?
Oh, yeah, there.
Right.
Exactly that.
All right, there we go. So now you can see I've got my 100% level there, which is normally our first target. No, that's the 100% retracement. let's say for instance, this swing here, you see, it means it has retraced 100% from here to here. But it started growing from this level to this level. It means this whole swing has retraced now 100%. So you don't look to trade in that instance. You see. Then you've got the 79%, you've got the 70.5, the 62. Now, can you see now the Euro USD? Can you see before, for example, 70.5, you can see the price 1.20811. You can see that price. It's because of that dollar sign function. That's why the price, that's why the price is now being listed. So it helps now to understand, like, okay, what price am I targeting? If the 70.5% level is 1.20811, what's our institutional price there? It's 1.20820. That's our closest institutional price. You see?
Okay.
Yeah, that's our closest institutional price. So it helps in that sense.
And then confirm, you said at this OTE, this is where you look to enter the trade.
Right. That's where we are going now. I'm going to show you a trade that I called in the group last week, Friday, but we couldn't open that trade because it was Friday and we were going into the weekend. So I'm going to show you now how you use 70.5 to open your trades, to enter into the market. So I'm going to show you that. But I wanted to ask you. Yes, Kodzi?
Yes, when you were drawing your Fibonacci there, it was going down and it retraced, but it kept on going up. How will you know that? You must wait for a confirmation, or something.
Remember, right now I'm just illustrating how to plot the Fib levels. I'm not like taking into context the price that's on the chart right now. It's just me showing you how to enter the levels and all that. So now I'm going I'm going to show you now how to take the trades using how it can help your analysis, in fact, not say how it can help you in your analysis. Right.
Okay, yes.
Yeah. This one it was just for example, so that you see how to enter the levels. So now I'm going to delete it. You see, now we are looking at Euro USD. This is the weekly chart, right? This is a weekly chart on Euro USD. Right. We can all see that Euro USD has been rallying from these levels. It has been rallying up there. And then now it retraced to this zone. You can clearly see that this move is like half of this move. You can clearly see that. So now, first things first, higher time frame concepts, we need to define our levels on a weekly chart, right? Now, you can also see this level, where is it? There, where my orange line is. We've got this level. We've got this level which was broken here. Then it was retested here, and then price rallied. It was retested also here. It's currently the level which price is working at. You can all see that, right? Now, now look to your right.
Yes.
What's the price level of that? It's 1.2970. So what we do now? I'm gonna double click that line. I'm going to the line properties. So it's 1296. I'm just gonna put it at 12980. Right, which is our institutional price. So that small chart that I sent in the group this morning, remember? So our institutional price, which the price has been working on, is is the 1290. Is the 12980. Now, this is a weekly chart. I'm going to highlight here. That's our weekly chart. So now I'm going to drop down to a D1.
So from 1 week, you drop down to D1 after getting those levels.
Yes. You see, this is our weekly chart, right?
Yes.
Now, there's one level that we didn't define. We were supposed to define this zone here. Right. You see this zone here, the one that I'm marking. Can you see that zone? The one with this doji here.
Yes.
Yeah. That's that was the support level which was formed prior to this break. You see this break, this bearish breakout. It formed, this was the new support level of this move. Then it comes, it tests it, couldn't break it, test it. Here it did break, but it couldn't break the previous, this guy here. I hope it's clear. You really do understand what I'm trying to put here.
Okay, sorry to take you back again. I see now these lines, you have two of them.
Yeah.
I can see the first, the second one is the one that you put after you you made that price into the whole number.
Which line are you talking about?
Remember there was no lines at all. So you drew the first one.
Yes.
And then we went to the price of the first one. Then after that, you went in again to put a line, but then you made it the whole number, the 1.12980.
Yes. That's the institutional level, which price broke. Remember this bullish candle here? Oh. This one.
Yeah. Yes.
Now, when price broke that level, it means market structure has changed. Now, look at this bearish candle here. And then after that bearish candle, market created a new level of support. This guy here.
All right.
When price came back to this level, you see here, it didn't break it. It tested this level, but it didn't break it, and then it rallied up again. You get it, huh?
Okay.
Yeah. Right. The session has got 10 minutes left. If it cuts out, you must rejoin. I'll restart it. You must rejoin if the video cuts out, because I think I've got only 10 minutes left. I only get like 45 minutes per session. So now that we have defined the levels, you can see I've highlighted the last 2 weeks. This is a weekly chart. So now I'm going to drop down to a daily chart. Now let's focus clearly on the shaded area, the green shaded area. We have defined our levels on a higher time frame. Now we need to focus on the green shaded area. Skumuzo, you can mute your sound. Right. So now let's focus on the green shaded area. You can see exactly what was happening now. This is a daily chart. Price came back to the 12,980 zone. It couldn't break that level. It rallied up. And then we need to define the institutional price of the old one. Let me just, these people, what's wrong now? Let me me just clear this. Just a minute, guys. Just a minute. All right, the new support level was on, that's 1371. So we're gonna make this 1380. Right, can you see what happened? The moment I adjust the line to the round number, the 1380 level, can you see what happened? If you look at the price where it is currently, and then you look to the left, you can see price always reacts to that level. You see here, these levels here. Price always reacts. So now, once this is defined, I have the levels that I'm gonna be working on. Don't forget, guys, this is like, how many pips are in this range? That's a range of 82 pips. Now, once I have the range defined, I'm going to go down now to H1. Let me zoom out. Now, can you see what's happening now on H1? Now, let's see. When was Friday? Last Friday was the 30th. Last week Friday. No, last week Wednesday. Remember, market is on a support zone. So we are expecting what? Bullish movements of price from that 12980 zone. Remember that, guys. Don't forget that. We had this move here. Smart money came into the market. Yeah, right. Big guys, they jumped in. They pushed price away from the 112,980 level. They pushed price away from that level.
Oh, damn.
You see this level. Let me just zoom out a bit again so that you can see nicely. Every time price coming to 1280, it pushes up. Of course, here, probably there was a lot of profits taken, but eventually they couldn't stay long. They pushed away again from that level. You see? So now, once we have this clear picture, zoom in now. Once we have this clear picture now of the market, then we are so sure now that price has to bounce from the 1280 level. But now, when you are trading now, it's not clearly that it will reach that 1290-80 level after institutions have done something like this. It won't really like do another 100% to the other side. You see? You can clearly see that this move never retraced 100% to this level. This move, it didn't retrace back 100%, right? Right. So now let me get rid of this green shape now, since everyone now knows which level we are working on. So now this smart money, the elephant in the room footprint, that's what we will be trading, right? Obviously, people will say, but you missed this. But you need to understand that is where the trades are going to be based on. That move there is the one that we're going to be basing our trades on. Yes, people will say, but you missed this big move. Yeah, of course you missed it, because no one would have known that market is gonna shoot up just like that. No one would have known. But now, coming into the following days now, that huge move is the one way you will be basing your trades on. Now, let me clear up this. So now that you've got, I removed my lines there. Let me just put back the 1280 level, and then you can see clearly.
Okay.
Yeah, 12980. It's actually 12980. Right, that orange line, that's where we are going to be basing our trades on. So now we need to define which swing point we are going to use the fibs on. Remember, the smart money footprint is the one that we use our fib levels on, not any swing move. You see, we're going to be using our fib levels on this move here. Those two bullish 1 hour candles, those are the ones we are going to plot our Fibonacci levels on. You understand, guys, right?
Okay. Yes.
Yeah. Don't worry about all this that has happened already. We are now looking to the future from there to here. You see how many trade opportunities were there. Probably 3 or 4. That's what we are looking at. Right. There's only 3 minutes left. So I'll continue with the Fibonacci level when I restart the video. Now I just need, if there's someone with a question, of what I've just talked about, anyone with a question, so that I'll continue with the Fib levels on the next video that I'll restart, because it's gonna cut off now. Anyone with a question?
Yeah.
Let's start with Kudzi. Kudzi, do you have something to say?
No, let him ask. Let him ask. There's something I just want to check.
My brother Mojalefa, do you have something to say?
Yeah, I wanted to ask that smart money move.
Yes.
So is that the only indication you're gonna wait for before you decide as to when you're going to put your fibs?
Yes. Because
okay,
yeah, that will give us what can I say? A more sure trade. You see, imagine if I had to use the fibs on this. You see, price has been meandering there, it meanders there. So I can't really use the fibs there. Yes, you can.
Okay.
It's risky. It's
okay.
risky trade, you see. But
okay, no.
Yeah, on a swing point like this, it's a more sure trade, like 90-95% that trade is gonna pan out. It will go into your direction.
Yeah, and then confirm this is on the D1 chart level.
No, remember, this is our entry now. We are going to look for entries from there. This is a 1 hour chart. I've already moved from D1.
From D1, okay, sharp.
So we are going to be...
Okay, Ivan, I wanted to ask.
Uh-huh.
You already knew that the graph was going to do this, because here it was looking like it was going to go down. And then it just went up.
No, that's
because of the...
If you remember correctly, last Friday, Kuzi, I told you...
Big boys.
Yeah.